Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork, and happy Friday. It's December 8th here, and we got the big day today, the jobs numbers. So what we've been waiting for is the non-farm payrolls for the month of November. This is the number brought to us by the Bureau of Labor Statistics. So last month in October, we had 244,000 new jobs created, which is a number here. Forecast for this month or November was 200,000. Some I've even seen some reports a little bit lower at 190, and it came in higher at 228,000. So good, strong numbers here. What we're seeing here, as you see, unemployment rate remained at 4.1 across the board. Now on the U6 number, we had a slightly different number here. It was originally at 7.9, and it had a slight uptick to 8% on the U6 number, and that's usually a better gauge of where the economy is at, where it takes into whole labor participation. Labor participation actually remained the same as the previous month. I think it was like 62.7%. Now, to kind of move along, we have the average hourly earnings for the month of November. So in October, there was no change in average hourly earnings. Forecast was supposed to be 0.3%, came in a little underwhelming at 0.2%, so it came up 0.2%. But the good news on that is, or I mean, maybe it's good news. A lot of it is we're obviously starting to see a lot more people being salaried position. So those being salaried are going to fall underneath average hourly earnings. So that could be another possibility why the number is not as large as we'd like it to be. Uh, Also, we got the consumer sentiment. We had 98.5 last reporting. Forecast here is at 99, and it came a little disappointing at 96.8. So people were a little less impressed so far this month at 96.8 so far. Um, and then we got wholesale inventories. So wholesale inventories, as you can see, we had a decline. So we had a 0.3% back in September. In October, it dipped to 0.5%. So wholesale wasn't uh, bringing up as much inventories here, or stocking up as much. So let's jump over the headline news. Stock market's up. They liked the job numbers coming in. They thought it was strong, uh, coming in. Also, good news. Congress got together and passed, as we kind of talked about before. Senate and House got together and basically kicked the can down the street for next 2 weeks until December 22nd. Give them a little chance in regards to a partial government shutdown, so we avoided a government shutdown. And then also across the pond, we had the UK and European Community negotiating. It looks like there's some progress being made over there as for the next step for the Brexit to take place. Talk about agreements and tariffs and everything else that's taking place. So that's moving, that's progressing, and sounds like it's some positive news. So this, of course, their stock market is took off a little bit today. Now that kind of plays a little role into ours because what was happening is with all the complexities going on there's some concerns. So a lot of those investors instead of buying into the bonds and everything over there, they're buying into a safe haven over here. So that was kind of helping our mortgage-backed security bonds and helping out our, our keeping our rates a little bit lower than what we may have normally seen. And that's why typically when the stock market's up, the bond market goes down. But the bond market in some cases, while the stock market was up, was also up. We were getting a little support not only from the treasury, but mostly from foreign investors coming over. So, oops, sorry about that. So, speaking of such, here we are. Yesterday we did test, all those supports here. The 50-day moving average, the 200-day moving average, this Fibonacci number here. We test that even coming down to a 25-day moving average. So we did that, and then today we were up most of the day, but so far this morning we did start dipping down. We're down about 9 basis points from where we left off yesterday. Now some lenders may have a little worse pricing today compared to yesterday, but if you look at where we are and where we started, there shouldn't be any change in pricing. But this will be important to note going into if we could get close above this 200-day moving average. As you can see, all these are meeting right here, and it creates that much more strength to break through. So if we could pull back and stay above this could be good for rates going into the Fed meeting going next week. So remember, the Fed FOMC will be going on Tuesday and Wednesday next week, where they're expected to raise interest rates. Now, typically, when they raise the short-term rates, that helps mortgage-backed securities, and they usually get a little bit of a rally and see improvement. But we're stuck on the other side of the 200-day moving average. We may not get as big of a rally as we'd like to see. So hopefully tonight we can bounce back a little bit and close above this. Well, now it's resistance, but at least this give us some support here and keep us above this 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 range here in between the this range here and the 100-day moving average, and hopefully get some better pricing going into the next week with the Fed meeting. So, all right. So, anyways, I hope you guys have a great upcoming weekend. That pretty much concludes things. But if you guys want more information, just come over to Twitter, which I'll show you in a bit. But usually, as I show you, 10-year Treasury Treasury's doing pretty good. It's only up about 1 point, about 2.38 so far today. But if you guys want to get more data, just come over to Twitter. You can find me at Mike Bjork and get more information. All right, you guys have a great weekend, and we'll see you guys on Monday. Sorry for the little confusion there at the end here, but hopefully that all made sense. There's not a lot going on here with mortgage-backed securities and Treasury. That's why I kind of played around with that. But Twitter, just go over to Mike Bjork, and you'll get more information over there. Take care, and again, enjoy your weekend, and see you guys Monday.